And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where we talk about foreign exchange trading, prop firm trading, and doing all those things that make money in the trading world. Let's see, I've been doing this for a long time. First off, I want to remind you, if you like this video, then at the end, then go ahead and hit the thumbs up button. And if you want to see more of these videos, then subscribe to the channel, and YouTube will notify you when I send out more. And lastly, if you want to hit comment, want to talk to me directly, then hit me up in the comment section, and and I'll reply back as soon as I can. With that, this is the Saturday version. Saturday, March the 28th. Markets are closed, so we've got a lot less to talk about as far as directional stuff. But it's good. Gives us a good chance to review the yesterday's activity and see what's happening with the weekly closeout. So with that, let's go ahead and get into the risk disclosure section, because we are putting money at risk, and you need to know about the risks on that. So this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure that's also required because I live in the United States. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into where we are on the DXY so far. That's where we start, is the DXY. I do not trade Bitcoin, so we're not going to do Bitcoin. But this is what this is all about. What's going on behind me? Good. The DXY rose again yesterday from 100 to 119. It's right at the top of that resistance range of 100 to 120. As you can see right there at 123 is where it tends to fall apart. So we'll see what happens with that. It's very interesting it's staying within the resistance range, so I don't think we're going to get any gangbuster market moves unless something really bizarre happens that freaks out the markets. Which does happen. With the euro versus the British pound, the euro has been topping the British pound lately. We're going right into the selling range right here, so we'll see if that continues. We do have a cross on the what is that? Oh, the 50 and 200. So we're going to might see that perk up a little bit. It's 200, right? Yeah, 50 and the 200, and longer May is green, shorter May is orange. Okay. And no, we don't. We have it crossing the other direction. And the 20 is way down here, so the 20 and the 50 cross here. We should start seeing more of a sell-off on that. So we'll see if that continues, or if we get another turn in there. This could be the widest part that they're going to be, which also dictates that that would be the a turnaround point. So we'll see if the 20-day moving average pushes the middle of the Bollinger Bands, changes, and go from there. Euro versus the dollar is straight down. The 20 and the 50 crossed here, and the 50 and the 200 are here. However, the Bollinger Bands are tightening a good bit yesterday, so it's not a whole lot of trading going on, but it dropped down to 115.07. Could be testing 115 later. Who knows? Could blow right through it. Here's the big surprise for me. Close at 160.29. No intervention, but Japan is hinting at it. So we'll see what happens on Sunday night. See if they come in and boost the Japanese yen, which would drop the dollar versus the yen probably 300, 400 pips. Is usually how they do it over time. It takes about 3 or 4 days, and they drop it about 100 pips a day or more. Pound versus the dollar, coming right down, blew right through 132. Started off at 133.30 yesterday, and went right through to 132.61. Our resistance is going to run out to about 132.22, so it looks like it's going to be testing resistance pretty soon. Pound versus the yen, right here. And it is continuing to meander. If you just look at the last 5 days, kind of meandering a little bit. Very, very tight. Very, very tight range on that. 212.42 to 212 to 213. 60, about a 65 pip range on that. Too tight for me to trade because of the massive moves that could be made in the pound yen. I'm not trusting this at all. I would not get into that. Euro yen. Euro yen's not going anywhere except, well, sideways. It's in fact the 50-day moving average and the 200-day moving average are right on top of each other, which is interesting to see those go side by side like that. To give you an idea of how boring that trade is, or how flat that is. Dollar versus the Canadian. Dollar versus the Canadian is taken off. Finally, it decided to go somewhere. I guess I just need to look at it as it sporadically breaks out, and then in the meantime we've got this trading range. Is how the UCAD trades lately. It's just it's very sporadic. It's very I don't know what to call it. Very weird. I stay away from the UCAD. Canadian versus the yen. We don't see a whole lot of movement here, but then it usually tracks oil prices, and it's been going sideways, as have oil prices right here between. Well, not quite as sideways as one would think. 88 to 100. It's about a $12 range on that. It's kind of a big range on oil. When I was a broker, we were offering it 40. The trade was a $40 oil call on $28 oil. That was also got us in a lot of trouble. Got some people in a lot of trouble. Didn't get me in a lot of trouble. I quit before that happened. So 99.63 is the close on that. Dollar versus the yen. Coming down a good bit. Not quite sure why. Maybe weakness in the Chinese economic data or economic reality, because their data is usually manipulated. Good. Go back. There we go. We do have a looks like a possible cross coming up on the 20-day moving average and the 50-day moving average. 200's way down here. It's not going anywhere. Nothing that dramatic is going on. Pardon me. And then everyone's favorite, gold. Look at that. 44.92. Finally get a weekly close below 5,000. Our second weekly close before 5,000. So we'll see if that's see how that works out. Platinum, it's right here. 2.6% up day yesterday. Palladium, 3.56% right there. And my favorite, silver, is right there. Closing weekly close below 70. How about that? Well, we had a weekly close below 70 last week too. And we've had a weekly closes below 70 for quite some time now. Well, 3 weeks, 2 weeks. Past 2 weeks have been below, weekly closes have been below 70. So we'll see if that continues. We could see a bit of a continued pullback in the metals. So look at the software sector got hammered yesterday. Look at that. HubSpot down almost 6%. Some news. Do we have any news on that? HubSpot slid 9.544% after Anthropic said Claude can control computers, and then fell 5% later amid an AI-driven market sell-off tied to Anthropic's Claude Maya Mythos news. So AI is continuing to dominate the news and continuing to freak out the big money. Salesforce down 3.37%. I guess they're saying that since nobody answers the phone anymore, no one needs a CRM. Very logical thing. Intuit. I'm still an Intuit customer, down 3.7%. GoDaddy, still a GoDaddy customer. Not sure how much longer. I'm going to be unwinding some of my GoDaddy products soon. Not this weekend, not tomorrow. Down to 2%. Adobe, been an Adobe customer for 14 years, 12 years. I think 12 years. down 2.5%. So these are all, I thought Adobe just downgraded the market performed due to rising AI-driven competition from Canva, Figma, Midjourney, Runway, and Big Tech. So it looks like digital revenue about 198 billion. And one thing that can't you ever get rid of is the need for human creativity, because humans are creative beings. We love to create stuff. I'm creating this video right now. But at any rate, that's all we've got right now. It's not a whole lot to talk about from yesterday. It was a pretty boring day of trading. So the only place that looked like it was making moves was the UCAD. Possibly a turnaround on gold, but I doubt it. Let's look at gold real quick again. I think it was a bearish engulfing candle. I mean, no, it wasn't. Not even close. So it's not a full retrace on the previous day's losses. So we could see lower highs. Lows about the same. So we're seeing lows about 43.73 and starting to see more lower highs. So we could see a downward breakout coming up soon. Same thing for the rest of the metals. But with that, that's about all I've got today. Well, tomorrow we'll talk about the weekly look ahead and draw our weekly numbers and put some more weekly numbers on the charts and see where we are with that. So you guys have a great one. That's all I got for today. If you like this video, then hit the thumbs up button. If you want to see more of videos like this, then subscribe to the channel. And lastly, if you want to talk to me directly, then just feel free to comment in the comment section. In the meantime, that's all I got for today. Talk to you later. Bye.